Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday and it's May 14th. Hope you guys had a wonderful weekend and great start for the week here. Today's kind of a quiet day on the economic calendar. We don't have anything going on today. Tomorrow we will get a few data coming out, starting with retail sales, and we'll have some housing news later this week as well. Had since September. It's been kind of a rocky start this year for the stock market with quite a bit of kind of geopolitical and some other concerns with inflation, for example, with the wage-based inflation that came in, the number that came in on January, February timeframe to, possible trade wars with, our partners like in China and Europe and, even with the NAFTA and everything else. So it's been kind of a rocky start of the year, but so far it's been kind of getting on track. Now, today we got a couple of Fed speakers. Most this week we're going to have Fed speakers, so just be prepared that there could, depending on what they say or what comes out, it could, of course, disrupt the markets if there's any surprises in there. So far this morning, there was Laura Master who spoke, and one of the comments she made, she's a pretty hawkish person, and came in that she feels that the markets could be underestimating the rate hikes in the sense that she thinks that they could raise rates. They could raise more. That could be more rate hikes this year than what the markets are prepared for. She thinks it could go up over 3%, and we'll have to wait and see. But in any case, yes, it's possible that it could be more rate hikes on the horizon than what maybe the markets are planning on. Also, there are some tweets that President Trump sent out the last few days here regarding to China. They're hoping that there's seem to be pretty positive comments in there, and so they're hopeful that this means that something good will come along the way in terms of the trade negotiations and stuff. That maybe things will work out for both parties and move forward, or whatnot. So hopefully, in that scenario, with these tweets that are being sent out, that perhaps we'll get a favorable impression. So far they're kind of viewing it as a positive sign there, because it's obviously what he's saying is pretty positive. So let's take a look here at the bond market here. Again, we're kind of going the sideways pattern here. We're down about 9 basis points from where we left off on Friday. We got room for both upside and downside, so just be cautious. It could go one way or the other. When it does turn, it usually goes pretty quick. But not quite enough room for price change for the worst today. So I'd say pricing's pretty similar to what we saw on Friday. And same thing with the Treasury. We're kind of here between the 25-day moving average and this ceiling at 3.04, kind of sideways pattern. So it could go one way or the other way. So if this goes upwards, it's going to push mortgage-backed securities most likely down, which will create rate hikes. Interest rates will rise. So if this comes down closer to the the 25-day moving average, that will push up mortgage-backed securities up higher, which will help reduce interest rates. So good signs right there. Just be cautious here going forward here. So that pretty much wraps everything up for the day. Again, rates are about the similar price in what we had yesterday. Today, again, is a pretty quiet day, so we're just going to kind of keep this short and sweet for you folks. But if you guys want to get more data and see more information, come over to Twitter. You can find me at Mike Bjork. I'll be putting for the week's economic calendar out later today, this morning, and you can get a glimpse of that today by just jumping on there. There'll be a link on there for you. All right, you guys have a great rest of the day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.